Welcome everyone. Today we are going to dive into the world of investment. We will be comparing Vanguard Exchange Traded Funds, or ETFs, against Vanguard Mutual Funds. Both are powerful tools to grow your wealth, but they have their unique characteristics, advantages and disadvantages. We'll be exploring these in detail, so sit back, relax and let's get started. First, let's talk about Vanguard ETFs. An ETF, or Exchange Traded Fund, is a type of investment fund and exchange traded product traded on stock exchanges. Vanguard ETFs offer broad market exposure, including stocks, bonds, and international indexes. They are known for their low costs and tax efficiency, making them a popular choice for many investors. Now let's move on to Vanguard Mutual Funds. A mutual fund is a type of investment vehicle consisting of a portfolio of stocks, bonds, or other securities. Vanguard Mutual Funds are managed by professionals and provide diversification, which means they spread your investment across multiple assets to reduce risk. They offer a range of options from index funds to sector-specific funds. One key difference between Vanguard ETFs and mutual funds is when you can trade them. ETFs are traded like stocks, meaning they can be bought and sold throughout the trading day at market prices. On the other hand, mutual funds are traded only at the end of the trading day at the net asset value price. Let's talk about the minimum investment amount. Most Vanguard mutual funds require a minimum investment, which can be a barrier for some investors. However, with ETFs, there's no minimum investment. You can buy as little as one share. This makes ETFs more accessible to investors with less capital. Expense ratios are another important factor to consider. Both Vanguard ETFs and mutual funds are known for their low costs. However, ETFs typically have lower expense ratios compared to mutual funds. This means over time you could save more with an ETF. But keep in mind the difference is often very small and might not be a deal breaker for most investors. For those who prefer automatic investments, mutual funds are typically the better option. They allow you to set up automatic investments and withdrawals. With ETFs, this feature is generally not available, which means you'll need to manually make each purchase and sale. When it comes to reinvesting dividends, both Vanguard ETFs and mutual funds offer automatic dividend reinvestment. However, the process differs. With mutual funds, dividends are automatically reinvested to purchase more shares. With ETFs, dividends are paid into your cash balance, and you can opt to reinvest them manually or automatically, depending on your broker's options. Now let's discuss shareholder rights. With mutual funds, you own shares of the fund and have voting rights. With ETFs, it's a bit different. You own shares of the ETF, but these shares represent an interest in the underlying portfolio, not the ETF provider. This means you may not have the same voting rights as with a mutual fund. Tax efficiency is another crucial factor. ETFs are generally more tax efficient than mutual funds due to the in-kind creation and redemption process. This process can help to limit the capital gains distributions that shareholders need to report on their taxes. However, both are subject to dividends tax. In terms of risk and returns, both ETFs and mutual funds cover a wide spectrum. The risk and return will depend on the underlying assets. For example, bond funds are generally lower risk, but also offer lower returns, while stock funds carry higher risk, but potentially higher returns. Remember, higher potential returns always come with higher risk. In conclusion, both Vanguard ETFs and mutual funds have their unique features and benefits. Your choice should depend on your investment goals, risk tolerance, and personal preferences. Whether you choose ETFs or mutual funds, remember, the key to successful investing is diversification, patience, and consistency. Thank you for watching, and happy investing.